Drawing the same old Bitcoin chart for weeks or months now, and it's now here. Here we are. Here we are.
Okay, fantastic. Here we are. So welcome everyone. Welcome back on the Financial Fox. And I know it's been a couple of weeks that we have not been on, and the market has been quite challenging, but so lots to discuss. Clem, nice to have you on the show, and Zach as well. It's great to be back.
Good to be back. Good to be back. And here we are, under 20,000, as I've been going on and on and on like a broken record now for 3 or 4 months. Here we are, and we're under 20,000. Bitcoin starts to look like it might be worth buying a little bit now and again. Probably going to go to 13, could go to 8.
Yeah, but you're coming up with these levels and these timings, but do we know whether the reason Bitcoin's going down is because people are just dashing for cash, real cash, as opposed to this funny money? And if that's the case, there's no reason for this to find a bottom at all, because they'll get rid of all the money they have in Bitcoin because they need money to fight, for inflation and the rise of the cost of living, the other stuff.
You see, it's quite interesting. You gave away your age in a pre-talk, and I was sort of what I call catastrophonic back then too. And we're not going to go into a catastrophe. It's just going to be a little bit, crunchy, or as the Australians say, a little bit nuggety, mate. And it's going to be bad for a lot of people, obviously, but it's not the end of the world. Not unless Mr. Putin gets even more stupid. So, it's just going to find a bottom, and then it's going to go sideways like it always does, and make a W like it always does, and then it go up again like it always does. I mean, I know panicking at the bottom is what most people do, and that's where you make your money, by doing the opposite. And so I think the money's in the not panicking. And, if you are out, you've just got to wait till the bottom is established. I mean, Steffi, can you put up that picture I just showed you?
Yeah, that would be a bit challenging, but give me some time.
You mean no, you can't?
Give me some time.
But, when markets crash, they go down and they make a W, as you know.
No, I think that point of waiting for the bottom, and then maybe you miss the first 10% or whatever it is, but you wait for the bottom. That's relatively straightforward. But what I was asking is whether there's a problem with Bitcoin and the cryptos, or it's just a problem with people's liquidity, and those are two different things, or is it both?
I think the way to look at it, why it's coming down is the central banks, particularly the Fed, are draining excess money out of the system, and when that happens, it hits asset prices. And it hits asset prices the hardest, where they're the spiciest or the most volatile, or however you want to think of that. So yeah, it's hitting crypto massively. It's hit the Nasdaq 30-odd%. So it's hit crypto 70. It's hit the Nasdaq 30 and a bit. It's hit S&P 24, and it's probably hit something really dull by 10%. So that's just the way it happens. So when they pull the money out, asset prices fall, and that's what we're experiencing. Crypto is very, very spicy, and therefore it's coming down a lot. But it was always going to do this. It's in inefficient markets, you get repeating patterns, which you've made your living out of all your life, Zach. If it's an efficient market, there's no patterns. But in crazy assets where nobody really knows what they're valued at or what they should be worth, it becomes a mechanistic, systemic, machiney thing. And you get these repeating patterns because the market is basically not very efficient.
I'm ready to share. So here we are.
Yeah. So that's how you trade a crash. Very, very simple. Most crashes, unless they've been intercepted by somebody with very, very deep pockets, make a W. They go down, you get a dead cat bounce, and then it pulls back to where it was before, maybe even goes a little bit lower, and then it starts to go up. So rather than worry too much about, getting the bottom, you just let it establish that bottom, let it kind of crawl around. And then when it starts to drift up or carry on sideways trading after a decent amount of time, you can then acquire. So as long as you believe the asset has validity, that's the way you trade a crash. It's really quite boring.
Can I add my bit to that?
Yes, sure.
So I suppose you're saying with that W shape there, you're buying when the midpoint of the W is broken to the right, on the right side, of course. It's usually helpful. It's actually nicer if the second low of the W is actually slightly lower, but just slightly lower than the first, because that means you've had a false breakdown, and you might have people who are short getting caught out, which means that the rebound can be stronger. And quite a lot of the times, if the RSI is in the right place, which it can be, if there's bullish divergence, which is another whole lecture, then you can actually buy just on the break back above the first low. So if you're aggressive, you could do that. And that is how it works. But I think you're basically right. And I think the thing with this one is it's probably better to wait longer rather than try and jump the gun.
Yeah, I think that's totally right. I mean, I look at it as a dollar cost averaging opportunity, because it could have a final breakdown to sort of 8,000 for a month or two, and there you were buying at 18,000, and you're going to feel pretty stupid. But when it goes off again, as I believe it will, you won't seem so stupid to buy at 16,000 when it's up at 60 again or 80. But that's to be seen. So I personally believe that now is the time to wait until it's established that bottom. And I believe it will be somewhere between 15 and 10, 13, 12 is sort of my number, but it could easily go 8. It will repeat the patterns that have gone before it over and over and over again. It will not be exactly the same, but it will be very similar.
Okay.
And, sorry.
Clem, I just want to ask you a question, because you keep saying repeating the pattern, and in a few videos before we mentioned about the 4-year cycle. So shall we maybe explain that again for anybody that doesn't know it or is not familiar with it?
Very good idea. The whole market is driven by Bitcoin, so everything tends to follow Bitcoin. Ethereum has tried to take that crown and failed, and it is very influential. But the 800-pound gorilla is Bitcoin. So when it goes down, everything goes down. When it goes up, everything goes up. That is how it works. Now, Bitcoin has this 4-year cycle where every 4 years, the amount of Bitcoin that's issued halves. So at the moment, every time there's a block, there's 6 and a bit Bitcoin get issued, and that's every 10 minutes. So there's a inflation of the money supply, which is about 3%. But every 4 years, that halves. So that 3% inflation will go down to 1.5%. And then it will go down to 4 years after that to 0.75%. And at some point in the distant future, there'll be hardly any Bitcoin being issued. But of course, it's being lost all the time because people lose their wallets. It gets, just people lose it. And so it's a currency that has a natural underlying deflationary, i.e. it on equal usage, it becomes more valuable, a bit like the Swiss franc. So the idea is that when you halve the supply, the demand remains the same, but the supply for new money has halved. So that puts upward price pressure. And so there's a trigger point when suddenly everyone goes, oh, there's halvening, oh, there's not enough Bitcoin, and people start piling in, and then it becomes a virtuous or vicious circle, depending on your point of view. And up it goes. So that is.
I'm going to bring up the chart of Bitcoin so then we can see that.
Yeah. Now, the important part of that is, see 2014. That little bump there looks exactly like the bump in 2018 and looks exactly like the bump in 2022. If you zoomed in on it, you would see it's exactly the same shape. The way you zoom in on it, Steffi, is to pull it over to the middle of the screen.
Yeah.
Yeah, pull it out, keep going. More. Yeah, more. There you go. Look at that. Seen that before, haven't you?
Okay, where is 20? Okay, so that's it.
Yeah. Then so 2014 is exactly the same as 2018, which is almost exactly the same as 222. The only difference with 222. Yeah.
Gosh, it's so exponential. Yeah. You know, DEX could really go.
Now, the only reason you have this double peak is the Russian affair. So if that Russian, if they hadn't started to move on Ukraine back then, and if everybody in the know didn't know it, then, and if Americans weren't pulling out of Afghanistan to move troops towards Europe, you wouldn't have got that double peak. You would have just had that single peak like you had in the past before. Now, if you go back to that 2014.
Yeah, I was just excited about over 100.
Now, you might want to hit draw again, because you probably lost that focus. Yeah, draw.
Yeah.
Now, move it back. Yeah, like you did before. Just move it. Yeah, there you go. So there's 2014. Now, move it back more now. Move it back some. Yeah. Keep going. keep going, keep going, keep going, keep going. There you go. There it is again. Yeah.
Right. So
so there's your cycle. There's your 4-year cycle. There's the cycle of Bitcoin coming of age. Okay, and it's the same old. Up like a rocket, down like a rock, back, crawls back, then up like a rocket, down like a rock, and then it goes down, it goes sideways, and it goes up like a rocket, down like a rock. So you've just seen 4 of those, and are we on the 5th or the 4th?
Yeah. And obviously, as you know, it goes through this circle, Bitcoin and obviously any kind of other cryptocurrency, they kind of mature. Do you see what could be another asset that does something similar to that? Is there any assets that, obviously we are not talking about halving because it would be
I mean, the way, if you think about the cycle, Bitcoin drives everything. Yeah, so really the easiest thing in the world is to let it fall. So down here in 2012, you know, it's doing the second leg of that Bitcoin thing is up there at sort of $8 a coin. Yeah, so if you bought on the third leg of that W, as it starts to go up, and then scroll it back to 2014. Now pull it to the left. Yeah, there you go. Well, there was another one there in 2013, and again, if you bought the third leg here, you would have bought at 150, and you would have been selling it. Well, I would probably be selling it about 800. But and then if you put it forward again and have a look for the W, yeah. Well, you know, yeah, go left a bit. Yeah, to make that more clear, right? So you know, you've got a big fall here. I mean, you've got a whole year of it going down, which is why you might want to let it settle. Yeah, but even if you bought on that first W at around 500. You know, come 2018, it's 20,000. Yeah.
Yeah. I mean, it's really.
Yeah, but isn't it like a 80% retracement? It's just sense to do things like that. 80-90%.
Yeah, you can look at it. You absolutely can look at it like that. I'm. You might not guess it. I'm actually kind of quite risk adverse in a way. I'm not for going in boots deep on anything. I prefer to say, well, it's crashed. It's in deep crash levels now, and I'm going to start picking it up bit. It's like Amazon. If you looked at Amazon in 2002, and 2003, and 2004, 2005, if you were just buying little bits of it, come 2020, you're a multimillionaire. So
yeah, but it rallied from like $1 to $13 and came back to 90 cents. I mean, it went absolutely. The retracement was an 80 to 90% retracement.
Yes, absolutely.
It was
the aftermath.
And anything, actually, if you think about it, anything which is really good does those 80 to 90% retracements, because it's the market's way of making sure that nobody's going to get in $1 and then be there when it's $1,000. That's it's the rodeo ride. It's the bucking bronco, and it is obviously the worst thing is they just go up. They go up $100 to $100 and they come back to zero. But amongst the best things, you see that 90% retracement thing going on, because obviously. People, don't want you to be holding that ticket when the party arrives.
I'm going to help Steffi here. Hit return, Steffi. Hit return. There you go.
Here we are. Okay.
So I don't disagree with anything you say there, Zach. I tend to think of it more as it's crashed. Is it good? It crashed. Was it a boom? Is it a boom bubble bust cycle? And if it's not, if it's a pump and dump cycle, then it's never coming back. And if it's a boom bubble bust cycle, then there's a good chance it will.
How do you know whether it's a tulip or not?
It can't.
I mean, don't underestimate tulips. You see, this is a myth. Tulips is $1 billion industry in Holland right now.
Yeah.
I mean, it was a boom bubble bust, but there's huge tulip industry in Holland right now. It never went away.
But
it was exactly like the .com, exactly like crypto. Tulips was a boom bubble bust, but they didn't stop growing tulips. In fact, Holland, even hundreds of years later, still has a massive tulip industry. So that's the thing to remember about tulips.
Yeah, but also the fact, the fact that institution has come to the space, the fact that regulation is looking very closely and kind of get a little bit more clarity on crypto. We got to a stage where it's not like a tulip situation. Is something.
No, not at all. No, I mean it brought down the whole economy of Holland.
Exactly.
And all the institutions were in it, and it broke the back of their empire and economy for a significant amount of time. But nonetheless, it didn't stop them and growing tulips en masse. The thing is institutional stuff. I mean, I think people who watch this show know that we tend to be a little bit anti-establishment, and you know, institutions they don't care. They just want to get their paycheck, don't they? And that they will chase what they need to chase, and they will run away as soon as possible. As soon as there's any, they're scaredy rabbits, most of them. Not most of them, all of them, pretty much. So they cannot be relied upon to do clever stuff. They just follow their own institutional herd, and send out press releases and don't do anything. And there will be no support from institutions for crypto. In fact, there'll be the opposite.
Yeah, okay, but institution coming to the space, the government doing crypto sprint, regulators looking at crypto assets.
No, they're just the people that mess it up. If you imagine the tech boom, it wasn't generated by government. It wasn't generated by institutions. It wasn't supported by investment banks. It was a load of kids in places like Albuquerque, who came up with something that generated a fire hose of money. And then all the predators, the government, and do you remember when government almost tried to wreck Microsoft, which is basically their key industrial new asset? And Bill Clinton and Al Gore tried to destroy Bill Gates and Microsoft because they didn't like it. They didn't think that it was Democrat enough. And they hauled Microsoft across the coals and tried to destroy it. Government and those guys. The only reason really America is not on its absolute knees is tech, and those guys were the backbone of tech, the likes of Steve Jobs and Bill Gates and Larry Ellison. Did they get any help? No, they didn't. They just got on invented this new powerful technology thing that changed the world, and crypto is the same. And will the government try to destroy it properly? Will they succeed? No. Can they succeed? No, because once technology is out of the bag, it's out of the bag. And the country that embraces it the best is the one that's going to be the next superpower. And, as I keep saying, the sailing ship was new technology. And the people in Venice thought it was rubbish because they had galleys with oars. And they said, this new technology is rubbish. And they went from being the leading power in Europe to being a city state with a damp problem. The French government didn't like the Industrial Revolution. And within 60 years, the king had his head on a spike. It's time and time again. Technology, Britain used to be a blooming corner of the world. It was Angle, was the four corners of the earth. It was a backwater. And, Henry VIII went to the field of gold and Louis said, look at all our money. You've got nothing, boy, go home. But within a couple of hundred years, the Industrial Revolution, the British owned 60% of the world because they had the tech. And this is the same thing over and over and over again. You cannot put this back in the bottle. The countries, the people, the young boys in their bedrooms will change the world because they cannot be stopped. They have no fear. They have no remorse. They carry on doing it. There's no putting it back in the bottle. If you want to make money, you just got to pick the right stuff in this zone and you will make yourself wealthy. In the same way with the .com. It's all over again. It's the same story over and over again and over and over again.
And it is great to see that also businesses and brands are getting into the space, are experimenting with that, are adopting cryptocurrency. So they are pushing from that side.
I don't agree. These people have no staying power. They just chase fashion. And, in the same way as nobody jumped on the internet for a decade, or not decade, almost 30 years, right? Home computing, personal computing, internet, all that stuff. The governments and the institutions were so slow. The whole newspaper and magazine world got wiped out because they weren't able to jump from their media to that media. All the record companies, they pretty much got wiped out because they couldn't jump on the internet. They couldn't jump on the computer wave. It took them a generation.
I agree on that. But there are brands, they are trying to do something. They might be scared. They might be at the very beginning. They might still trying with NFTs.
6 months, you won't hear any of them.
You think so? You think that's
go run off? Oh, chase the next thing. Chase the next thing.
Okay, that's an interesting perspective. Okay, so going back to.
So you'll be able to buy it super cheap And when it gets fashionable again, and they all come running and go, ooh,
Yeah, exactly.
you can sell it to them, take your profit, and let it crash again.
Okay, Clem, let's, I mean, we talk about Bitcoin, obviously that is kind of like the master cryptocurrency and everything follows up. Let's talk a bit about other assets that you see being another good element to put in the basket as you are keeping up.
Well, I think Zach probably has got a really strong insight in what happens next. So Zach, what's going to happen to the market, the stock market?
Well, I was actually going to ask you. I was going to ask you just to remind me why the central banks have to intervene against inflation.
Well, because they need it. They need inflation. Last thing in the world is they want no inflation. That would be absolutely.
So why are they raising interest rates?
Well, they're not really, are they? So what's the interest rate?
What, 2 or 3, 1 or 2?
Yeah, exactly. That's not interest rates, is it?
Yeah, but that comment is going to destroy the economy. It will put a lot of companies out of business, etc., etc., or at least reduce a lot of wealth if in the stock market, which is exactly.
Well, no, they have to reduce the wealth. They have to reduce the nominal level of cash, and they're doing it by making the market correct. And when it reaches a level where they've destroyed, I don't know, 10, 15 trillion, which is almost about now, that will cancel out what they pumped in cash. Now there's going to be some sort of.
And do we really believe that these people know what they're doing? I've never seen them know what they're doing ever.
Well, I don't know. I mean, I think they rescue.
It always goes too far. They're very good at. They're very good at central banks. Very good at destroying value. They're not very good at helping create value.
Well, I mean, I personally think if they hadn't stepped in 2008, that would have been absolute cataclysm. And again, you might criticize the COVID actions that were taken in 2020 and 19, etc. But if they hadn't stepped in, there would have been a cataclysm there. So there hasn't been a cataclysm, and now there's a sort of reckoning going on, and that reckoning involves a reasonably high level of inflation to rebalance, state debts, and get their fiscal budgets back in line.
And if you raise interest rates and people put their money on deposit, that's not exactly anti-inflationary, is it?
Well, no, that's Erdogan's point about Turkish inflation and Turkish money supply. That high interest rates creates inflation, but it's not. There's a obviously you can say, look, if you have.
So glad 10, I agree with him.
If you have 10, well, I know, but it actually it's true, but it's not true. If you have 10 and you've got 20% interest rates, you obviously got to have 20% more money otherwise everyone's going to go bust, right? But the point is, there's lots of high inflationary countries with high interest rates for sure. Yeah, because nobody's going to put their money, going to deal with fear unless you've got this big kickback coming along. The point is, inflation's always caused by money printing. If you print the money, you get the inflation. If you debase the currency, you get the inflation. It's really nothing to do with interest rates. It's to do with how much money you have in the system and how much supply you've got matching it. And, at the end of the day, they've created vast pools of liquid money. The old QE way is to make illiquid money that supports everything, that becomes collateral, that supports credit with low interest rates. And that's a system that has worked really well. But they went and they hosed out money to everybody. And that is massively inflationary. If you give money to the rich people, you don't get inflation because they go, oh, I've got some more of this, give it to the bank. The bank lends it out. And they've got no use for that money. So you have a trickle down. The moment you send it out to people that haven't got money, who want to spend it and need to spend it, bang, then you get inflation. And if you write stimulus checks, bang, you get inflation. If you send payments to people because of their electricity bills and gas bills, like Mr. Chancellor Shecker's just done, that is massively inflationary. And, that's it's the political level that are clueless. And they're not clueless. They just want to get elected again. So
but my problem with this new enthusiastic tightening that we've had for the last few months is that there's absolutely no window on what the time frame. We can't see how long this will take. It could take 3 months. It could take 3 years. It could be anything.
Well, it's meant to be October at 11%. But what you need to.
And so there's no reason. So there's no reason for anybody to bottom fish anything. Because if you are, just like in the 70s, it could take from 1973 to 1981. It could take years.
Well, actually, I think you did quite well if you bought in 1973. But, when the end of capitalism as we know it, and Grand Met was fractured or whatever it was, But taking that to one side, what you have to factor in is central banks believe that inflation is caused by the expectation of inflation. Yeah. So the best way to stop it, apart from taking money out of the system and killing everybody, is to frighten people about that there's inflation's going to go away. You know, we're going to stamp down on it. We're going to stamp down on it. And then people, when they go for wage rises, they're told by their bosses, well, you know, they've raised up interest rates and that hurts us, and inflation's going to go away, so we won't give you a pay rise. We can't afford one either. So that is their tactics, is to try to manage inflation expectations. However, it's all about how much money is in the system, and they're dealing with that by actually giving a haircut to the stock market and probably the housing market too, and also the bond market. And that will draw out a lot of money from the system because it will destroy collateral. As you said about crypto, well, maybe people are selling crypto to make margin calls. That's exactly the mechanism to pull out inflation out of the system. But they won't pull it out too far.
I don't think that's what I'm saying. I don't think that this policy, when you just create panic selling of assets, is a policy. It's just like going into a it's like, you know, it's like the American, you know, gun shootings. It's just literally a random disaster area, and it's totally blunt, and it's you have unforeseen consequences. It's all it is exercise of power by people who like exercising power.
I mean,
nothing to do with
that. None of what you say needs to be wrong, but let me put it this way: if I were them, this is what I would be doing, because you've got to take this money out of the system. Well, you can take
why? I don't think you have to. I'd rather the value of money went down. So you get into the Weimar thing where actually you'll just, you know, people who want to buy a loaf of bread, it'll cost them £5 and they won't buy a loaf of bread. I mean, you know, that's a better way of doing it.
Yeah, well, I think, you know, unless you want a certain Austrian painter with a small toothbrush moustache to get into power, I think Weimar style inflation is probably not that great an idea.
But what's the difference between that? Yeah, but in real terms, the consequences of both strategies could may be the same.
Well, I don't think so, because what happens is you get a correction. The point is, you could
get social unrest. You could get, you know, if interest rates here went up to the level of inflation, you would have social unrest and you have all the other stuff.
Well, you're not going to get that. Interest rates aren't going up. We don't have interest rates. We can borrow money at 1.5 or 5%. And the debt is going down at 11. That's
so scaring people out of crypto and scaring people out of the stock market, and maybe is the best policy.
It's the softest way of doing it, because at least you're only robbing the rich directly, although you're probably robbing the poor with their pensions long term. But they do that government does that for a living anyway.
And what about just leaving it as it is?
Well, I mean, if it didn't print any more money, it would probably be inflation for a lot longer and a lot higher, and then it would come down.
Yeah, but I don't have a problem with inflation. I don't see. I was there in the 70s. I didn't have a problem with it.
Well,
it cost me, you buy your Mars bar for 10p, then it was 11p and 12p.
The trouble with inflation is that it makes it difficult for business to work efficiently. And that is the only problem with it, because everybody's running around trying to manage.
I have more of a problem with the idiotic level of taxation, which is now approaching, you know, the 40-50% in this country. That's the real problem.
In 1978, you know, it was 98%.
Yeah,
there's 84% income tax and a super tax on unearned income. So we still got it pretty good. Right, I mean, I live in Monaco, so it's a little bit better.
If you're so keen about taking money out of the system, why not just raise taxes more and more and just leave interest rates and other things as they are?
Well, as I said, that comes down to politicians, not central bankers, and they don't want to raise tax. That's the other way of doing it. MMT says you can print as much money as you like, and if you get inflation, just tax it away. But of course, politicians are never going to do that. They're never going to raise taxes. They're never going to do that, because that gets them fired, doesn't it? Exactly. So they'll print the money and then they won't raise the taxes. So it's down to the central bank to find another way of draining the money out. And a way of doing that is cutting back on collateral by dumping asset prices.
So, but you, just to go back to what I was saying, do you think there's a line of sight on the turnaround here, or could it be the nightmare scenario where this goes on a rolling basis for two, 3 years, et cetera, et cetera?
Well, I think if I were them, I would want a 6 to 7% inflation rate, because I can probably make the numbers look like 5, and I can probably go, it's not me, it's him over there. It wasn't me, I didn't do it. It was Putin. It's COVID. It's it's the supply chain, it's all these other reasons. But we're working on it. We're working really, really hard, and interest rates might need to go up, and and then as that 7% does its work over 2 or 3 years, and GDP gets back to 90% of debt for your country, you're done. It's all over then. You've rebalanced it, and I think they're just trying to rebalance it. And they did what they needed to get past this catastrophic canyon of economic disaster caused by locking everybody down and wasting 20% of GDP. And they've got to, like they did before, they've got to smooth it over a very long period of time so everybody belly aches about it, but doesn't do anything more than that.
Yeah, I think it's not going to be easy, and
it's going to be rough, right? I mean, the thing that everybody should peel it all back to is, if you lock up the economies of the world for however many months it was, 6 months in 2 years, how much wealth has not been created? A lot, right? What has that effect on everybody's wealth? A lot. How's your wealth done? Well, it doesn't seem to have changed. Well, it has, hasn't it? The number's not changed, but the value of that money has gone down, is going down. So you either can't buy what you want to buy with that money because it's not on the shelves, or the price has gone up so that actually you're buying 20% less of it for the same money. And that's what inflation does. It makes you poorer in a way where you don't really notice.
Exactly. And that's why it's bad for businesses, and it's bad for entrepreneurs. And
it's bad for businesses because they find it hard to finance themselves.
Exactly.
Because the value of money is volatile.
Yeah, but also there is, suppliers. There are different kind of components that businesses to deal with, and when
you have to be a good business to do well in inflation.
Well, hang on. Wait. What's been bad for business in the last 3 months is the Fed interfering with the money supply. That's been the worst thing. Everybody's just like a rabbit in the headlights now. There's nothing worse than that. Stock market's ground to a halt. Everything's ground to a halt. And it will for the next 2. Nobody's coming. Everybody's like, wait till the end of the summer because of that. That's not good for business. They were quite happy until let's say before Ukraine. They were quite happy, coming out of the pandemic. Now,
this would have still happened. This would have still happened. I mean, I was predicting that this for yonks and yonks and yonks. The S&P was doing like that in a straight line, which you can't obviously maintain. And then when it had to come to an end, when QT started to happen, when they stopped just printing money and handing it out, it would come out of that trend and then go down, and that would be the end. And it has proved to be the end. And here we are. The point is, where's the bottom? And I don't think the bottom is far, because actually they've kind of got it to near where they need it to be. And if they push it too much further, they'll get another mess.
Okay.
And I do not think they're stupid. I think they know exactly what they're doing. And they're trying to sort out this massive problem caused by all the COVID lockdowns, which was economically disastrous, as it would be. Everybody is going to take a 10 to 20% haircut of their wealth, because that's how much wealth has been lost. Simple. Everything else is just details on top. The bottom line is the COVID lockdowns cost a bloody fortune, and now we're paying for it.
All right, I've got to say goodbye on that note, because I'm sitting outside the Imperial College Cafe, which is obviously a very intellectual place. But I might have to get on with the other aspects of the day. But I'm still going to try and work out what the best idea would have been, or a better idea. But
what's the bottom of the FTSE? Give me a bottom on the FTSE.
Oh, well, probably just intraday 67, 68. I don't think it's going to be worse than that. I think we're at 7,000 now, but I mean, this should be the low anyway. But let's say give it a
I think we're on the same page, but for different reasons.
Yeah. All right.
Taka, thank you.
Cheers.
Ciao.
Clem, let's go back to crypto, because I wanna dig a little bit.
What about
crypto? Okay, so basically we are still trying to reach the bottom, right? We are not at the bottom yet, and that will come with a few more headlines, like
lots of them, lots of carnage.
Coinbase, whatever is just going to be. Okay.
I think it's more likely to be lots of people we've never heard of. It'll be somebody called Abadooby crypto and AY97B coin. It'll be lots of people you've never really heard of, and that you'd have to be deep in the infrastructure of what's going on to actually know who they are, who have gone and done some incredibly sketchy and massively leveraged nonsense, and that all blows up in these sort of circumstances as you're seeing now.
Okay, and talking about regulation, and I also want to mention Circle, because they just released a new stable coin, a euro stable coin, which is interesting. Do you think they're going to feel, I mean, obviously they are feeling something, but
well, no, because I believe Circle is actually one-to-one cashback.
Yeah,
It's not mucking about with, you know, staked Ethereum and reverse lunar derivatives. So it's not doing anything stupid like that. It's just got a pile of cash back in the USDC, and that's it. So that they are, you know, effectively the sort of people that will, well, I hope they will. My exposure to USDC is a lot less than it was. But you know, they're exactly the sort of people that I'm expecting to survive.
Yeah. Okay, what about Tether?
Tether?
Yeah.
Well, look, first rule of fires in theatres is that you don't shout fire. Yeah, actually what you do is you just go to the exit calmly and leave. Yeah, and if there's no fire in the theatre, you certainly don't shout fire, because that is tantamount to murder. And you know, the guys behind Tether have been through hell and high water with their stablecoin, and you know, I think they should be hardened. You see, if some company starts a stablecoin 6 months ago,
yeah,
there's all sorts of things that they don't know about life, the universe, and everything. And when, you know, the cold winds blow, they perish. Whereas Tether's been absolutely through a mountain of poo over the years. You know, they had a bank run off with $300 million of their money, all sorts of things. I don't think necessarily they're as rock solid as, say, USDC, but I'm still holding some. And I think, again, they're the sort of company, they're seasoned. So what you have to look for is the seasoned people, the players that are seasoned. It's like Uniswap. I mean, Uniswap ain't going anywhere, even though their valuation might have dropped 75%, because they've got a beautiful business model. There's 17 of them. I mean, there's not many of them. And there they are, sat wherever they're sat. I think it's in New York somewhere, and looking after their technology. And you know, they might have to forestall buying Lambos, but they ain't going nowhere. Whereas a dodgy coin out there with some crazy, oh, we're going to do this, going to do that, and fabulous this and fabulous that, and you know, actually what we've done is we've all put it in some crazy DeFi project that is a scam, and oops, it's gone. They're the people that kind of go away. Oh, I'm a hedge fund, and I borrowed this, and I borrowed that, and I've levered up this, and I've levered up that, and I've levered up this, and I've levered up that. Oh, I got a huge inverted pile of leverage, and oh, one of the bricks fell out, and crash. There's going to be a lot of that as well. You can do lots of exciting stuff in crypto that is absolutely terrifying, and I've even played with it myself, and it's terrifying.
Let's mention some other survivors. You mentioned Uniswap. Let's carry
Compound. Anybody in the crypto space can be wiped out by hacking. That's your basic risk, hacking. Yeah, you know, you hire somebody that you didn't know was from North Korea, and they're inside your operation, and before you know it, all your money's gone. Okay. That is the number one risk in crypto. It doesn't matter whether a Bitcoin 60,000 or 6,000. That's your number one risk. After that, centralized businesses are much weaker than decentralized businesses, because the compound smart contract on its stuff, it doesn't have a human in there. There's no humans. Well, hopefully, it's much harder for humans to do anything naughty. They can't say, oh, all this money from our depositors, oh, we've moved it and we put it in a futures contract that's 6 times leverage and it's going to be great. And oh, it's all gone. You can't do that. It's locked up. So apart from being hacked, you can't have any clever boy spoiling the picture with being a smart ass saying how he's going to rule the world. As we've seen a fair amount of that recently, haven't we? And boy, they don't last very long. But you imagine you've got your money with somebody like that, you're at great risk. But if you're in a decentralized contract, outside of hacking, it can't be wrecked. Yeah, okay. Unless there's a technical weakness in it. So if you look at projects that are seasoned, like Compound, they hack themselves by accident. So anybody can hurt themselves. Aave, you know, Uniswap, that those people are the people that have a good chance of survival. People that have got a proof of work rather than proof of stake. Proof of work is much more secure from others than proof of stake. So the survivors will get very cheap and then will go very high in 4 or 5 years.
So talking about layer one, obviously, you know, we kind of put Ethereum in the box of the survivors, I believe. What about Solana? Because they got a massive rise in the boom, but they are very centralized. They got hacked. You know, what's
you know, I've got to say, and I've got my hand on my heart to say that I didn't really grok the likes of Solana and Polkadot and all that, and I still don't. I still don't find them particularly interesting. Matic has Polygon has got good traction, so I quite like them, and I know quite a bit about them. And so, but you know, after a fantastic run, I took some little chunks of money and put them in various things, and that money's been nuked. I don't mind because it was only a side bet against the fact that I might have got out too early. But you know, Compound was 800. It's now, I don't know, $50. Polygon was $4 and is now 35 cents, and on and on and on. And you know, they're the sort of things that in a year's time or 2 years' time, I'll be interested in. And you know, whether you're where CryptoPunks will go and where Dead Bored Apes will end up, who knows? And whether they'll ever come back, I can't really say, because it never caught my imagination, never had me believe in those sort of things. But NFTs are going to be massive. So what is the NFT thing that will work? You know, someone's going to come out with a World of Warcraft with crypto, and that game will be worth billions, and it's not here yet probably. So there's a whole raft, there's a whole smorgasbord of opportunities to buy wonderful cheap crypto, but you have to know what that wonderful cheap crypto is and not get tied into the rubbish that will go off a cliff. And the way to do that is that you just have to do your research and do a lot of it and not believe what anybody's telling you. That's the key thing in crypto. Don't believe anything, not even me. Just take it as a little bit of data to be tested, and you know, go out there and find the projects you like and respect and are doing stuff. Do what they say what they do, and you know, are not in any way dodgy or geezerish, if Americans follow that. You know, so many scumbags in crypto.
Yeah.
Really, you should just put your scumbag detector on and then turn it up to 10. And if anything doesn't trigger it, then that's the sort of thing you should look at. And everything else, forget about it. It's all going down, and it's all going down a long way, and it's going to lie on the ground. Everyone's going to say it's all over and they're all rubbish and it's all trash and they're never coming back and it's just a phase, and then it will come back. And you need to separate the wheat from the chaff at that point, and do a lot of research into the ones that you believe in, not, you know, oh, Cointelegraph said, you know, proper research into it to make sure that you've got a high probability of being right. And then you need to build a portfolio of those, and then you need to slowly acquire it over the next year or two. And then when it goes vertical again, you'll be smiling.
Yeah. So Clem, I wanted to pick up your brain on that, because you mentioned NFTs, and obviously they are the building block of the next internet or Web3, let's call it the way we want. And but the utility they had so far, it was kind of limited. So now we got to the stage where, okay, we realized they
had great utility, and the utility was, I'm 21 years old. I've made $6 million in crypto, and I want to show you what a clever boy I am. So I bought an extremely expensive asset and I put it on my Twitter. In the same way as I might walk around with a Patek Philippe on my wrist. I'm a clever boy. Pay attention to me.
Yeah.
Girls, let me buy you a drink. Boys, give me money and respect.
But that's gone because everybody.
Yeah, it's gone because the money's gone. So the utility of that's gone too.
Exactly. Okay, let's look at the next things for NFTs. I'm personally quite excited about verified NFTs, so adding identity to an NFT. So that
NFTs are keys. All an NFT is a key to something. And the Bored Ape boys and girls seem to have are on that page. So it is a ticket, and it's a ticket that I mean, some people have been using it as a ticket. It might be a year subscription to a website, or it might be just, as I said, I've got a nice Rolex, so they let me into the club. I don't have to queue. Yeah, it's a status symbol, but it's a key. It's a key, and it could be a key to anything. And the anything is where that's going to go. So it could be a house, it could be a car, it could be property, it could be all sorts of things.
It could be identity. It could be identity as well.
It could be the key to your identity, but it could be the key to a box of data about you that you, for example, can sell on.
Exactly.
And on and on and on and on.
That you can put. They also can be portable. Okay, so we kind of established that. So that's where
it's a technology. It's not a picture of a monkey.
Yeah,
it's a technology, and the technology is that it's a unique token, and that, like a key is a unique token, unless it's a master key. But anyway, let's not go there. But it's a key, and it can open things, and that is where NFTs are going, and that's going to be extremely valuable.
I agree.
Now, whether it's going to be an ugly piece of cartoon drawing, that's going to be valuable, or what the key unlocks is a different matter. And I believe it will be what it unlocks. And that is the way that it'll be going. But it's no good. I do this all the time. I'm a treasure hunter, and I'll be in a field and I'll find a keyhole. And the joke amongst treasure hunters is, where's the treasure chest? Yeah. And it's no good having a key. You find keys, but they're normally iron, so you don't tend to find them. But you can find keys too. But where's the box? Where's the treasure box? It's no point having a key if you haven't got a box of treasure. It's no good having a key or a keyhole unless it's attached to a door, unless the door is attached to a building. So they invent the keys, NFTs, but people haven't invented the locks, and they haven't invented the doors, and they haven't invented the boxes and the buildings to go along with them. But that's going to come.
Or connect the dots, because those things might be already there. They just need to be.
That's a soldering iron. We haven't got them yet.
Okay, so DAOs, because in Austin, the conference, Binance got a massive DAO house. It wasn't, compared to the conference, it was very small, but there were a dedicated place where there were lots of conversation about DAOs, and DAOs didn't have their DAO summer yet. So,
the reason DAO is a great idea. Okay. However, DAOs are amazingly politically naive. Yeah, $1, one vote. Yeah, do you see the problem with that? You should. You imagine that our democracy was run by $1, one vote. That's how they run it in Russia. It's called an oligarchy. Yeah. You know what happens with oligarchies? Nothing good, right? So most DAOs are oligarchies. So actually, they're dysfunctional political systems, and they always will be, because the guy who starts the country is basically the king. It's a monarchy, not even an oligarchy. Well, I started it. I've got most of the tokens. Yeah, no, we're not passing that. Yes, we're passing the one that I want. And they've all got sorts of problems like, oh, we got a proposal. We put it up yesterday and we passed it. Oh, okay. You didn't tell me then? You didn't email me? Oh, we don't email anybody. It's all anonymous. Well, Mr. Anonymous is not going to be watching your DAO page every hour of the day to see whether you're going to stab me in the back. So these naive political systems are just that, naive political systems. For DAOs to be powerful, there have to be sophisticated political systems that operate in a way which is very benign for everybody. But funnily, no one's come up with one of them yet, ever. Not in the history of politics. So what are you going to do? Reinvent a new political system that no one's done before? Could happen. Someone will probably come up with it, but they haven't now. One man, $1, one vote is not the basis of good governance.
Right.
It's called a dictatorship, basically, or an oligarchy. Anybody like that? Nobody would say we want $1, one vote in their country, because they know, that would make somebody like me, well, millions of times more important than somebody with no money at all, right? One person, one vote. That's different. Nobody's saying, I mean, how would you do that with a DAO? It's probably a way of doing it. No one's done it. Yeah, no one said, well, we're going to have a representative, delegated proof of stake. Oh, yeah. Well, then all the delegated get together and form their little oligarchy. And the guy with all the coins that starts off with is all of them anyway. And it's all a stitch up. I've seen it time and time again. Even such an early period as today, it's happened time and time again. And it's the big flaw to what Ethereum's doing, because it's going to be proof of stake. And then if somebody's a bit cleverer than somebody else, all the Ethereum will go to them, and then they'll be the king of Ethereum. And that's the whole point of not having that. So it's no longer decentralized. Proof of stake is oligarch. Proof of work is a sort of law of the jungle anarchy idea. And anarchy has its problems, and dictatorship totalitarianism has its problems, and somewhere between the two in the modern world seems to kind of just about work out. But really, everybody's trying to imagine that these DOAs are somehow something new and groovy and will change the world. Right now, they've got nothing really new to offer that is going to change much. And there's so many flaws into the way that they're configured at the moment. Someone will have to come up with a completely new mechanism to actually make them the all-changing, powerful political thing that we're all hoping they will do. I mean, if you look at politics, I mean, there's 300 MPs in Britain. Why isn't there 5,000? Why is it in London next to the Queen? Why isn't it in the middle of nowhere in a big building? Why don't people vote electronically? All that stuff, massively inertial. Representative democracy, as we know it today, is based on the fact that you had to get on a horse and ride for several days to get to the central power. Is that going to change anytime soon now that we can do that at the speed of light? No, because the governmental inertia is infinite. They still wear blooming wigs.
Yeah.
They still wear stockings and bang on the doors with big sticks in ceremonies that come out of the Middle Ages. Politics isn't going to change fast at all. But for DAOs to actually be powerful and valuable, someone has to come up with a mechanism which does unleash creativity, does unleash, does disintermediate all those people that suck out value by being middlemen in a political process. And that's not there yet.
Okay, Clem, just to wrap it up. So you mentioned about dollar cost averaging. We already said what we should look for, but what's your strategy going forward?
Well, I was going to start buying about now, but I've taken a lot of my crypto to fiat on the basis that I don't want somebody's company to fold onto someone's company that folds, another company that folds, another company. I don't want to be in a chain reaction. And that chain reaction is going to go on now for several months, I think. So I've got a fairly large amount of dry powder in crypto. So I'm just looking at it and going, well, I'm not going to catch this falling knife. And it's not going to, there might be a short-term dead cat bounce, but I'm seeing it in the low 10s in my mind. And I've got it relatively right all the way down to here. So why change my plan? And I will buy, as that chart you've seen, I buy on the final leg of that W. Now, it might be a little W before a bigger one, and I might end up buying at 15,000 rather than 9. But, the thing about dollar cost averaging, and I always call it collar cost averaging or something like that, dollar cost averaging is that you just say you started to buy today a little bit, and then it goes down, you buy a little bit more. So you're averaging down. And then it goes up and you're averaging up, and then it goes down again, you're averaging down, and then you're averaging up, you're averaging down. And over a extended period of time, you're going to get a good average, and that's going to serve you well. And if it suddenly goes tanks down again, you're going to average down and down and down and down. The only thing you have to be sure of in your own mind is this a good asset that is going to rise again? And as long as you do, then the easiest on your psychology, on your digestion, on your anxiety is just to buy a little bit and off. And I'm I'll let this first leg go before I start doing anything. And if that's this morning, that's this morning. And if it's next Monday at 13,000, it'll be next Monday at 13,000. But the old thing about, I used to make a living catching falling knives. That was my specialty in equities. And probably not the time to do that right now.
Okay.
The weekends is when these things seem to be doing their thing. And it's coming out in the middle of the night. So it's almost as if it's coming out of Asia, but it could be, well, I mean, who was awake when this market crashed? Was it the UK waking up, or was it Japan going to bed? So anyway, there's going to be false sales, there's going to be market moves all over the place, and I prefer to let it calm down. As an investor, you shouldn't trade, really. If you're going to trade, then now's your moment. If you're a trader, go for it. But if you're an investor, just let it die down and let everybody weep and say how it's all over, and oh, once I build a railroad, build it more, and then that's when to buy.
Okay, yeah. Clem, thank you so much, and yeah, there was an amazing insight, and then let's see what is going to be the bottom. But for now,
here we are, we're in the zone.
Yeah.
Okay, and I believe if you went boots in right now, you'd be weeping in a few weeks, but in 4 years' time, you'd be telling everybody how you bought in under 20,000.
Yeah.
So, you know, I would say don't be reckless, don't be rash, don't be clever, just be dull. Because even buying at 15, 13 or 13,000 or 10 will appear to be mighty brave to everybody else. So, you know, just take it easy. Here we are. It's the final, you know, it's the final countdown, and just take it easy. You knew it was coming. Here it is. Be calm. You know, be one of those really annoying people that doesn't matter how bad things are, like to be cool and groovy and chilled. That's what you should be, because now is the moment when you should think about starting to acquire. You're not going to miss anything by hanging back. Buy the last leg of the duck.
Okay, Clem, thank you so much.
Bye. See you soon. Bye-bye.